Right now on social media, everybody's screaming for recession and big, massive market crash and all of this stuff. And I was just thinking, like I actually haven't checked the charts yet. I've been waiting for my alarm here to get triggered because, like, I was just, well, I was talking before, like the market was heating up quite a lot. It would actually be beneficial if the market pulled back and I put that little alarm in place beforehand at the support of the recent high, and that was the time where, like, if it hits this, great, great, great buying opportunity. I should probably check the charts then. And I've seen all this negative news on the social media. I was just thinking, did my alarm not work? When's it going to get hit? I see all of these negative news articles, and I'm just like, hey, I'm going to open up TradingView, just double check, like it hasn't gone straight through my alarm, and my alarm didn't work for whatever reason. So I open up TradingView right now. I actually haven't looked through anything except for the S&P 500. And what do you know? It hasn't even been touched yet, right? So obviously the stock market, it can be a bit of a scary place, all right? There's no doubt about it. The market goes up and down like crazy. But overall, like, we should really not get scared at this. 3 weeks down, right? Yeah, it's quick. The market, the saying is in the market that the market goes down like an elevator. Takes the market down. I mean, it takes the elevator down and it staircases up. So whenever the market trends up, it goes quite slowly, and then when it goes down, it goes pretty damn quick. Like, if you just eyeball it, there is a lot of red candles where in the past they're big drops, right? Now, if we zoom out here, right, and let's just draw around the most recent dip. Please, 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 don't be getting scared about this, right? The reason why I love this chart so much, the S&P 500 Road to Financial Freedom, is just the best when it comes to keeping your emotions in check, right? What was my last few videos about? Hey, we're going too fast, too quickly, getting close to the upper boundary where it's like bubble territory. We actually need the market to pull back. And what do we got? The market is pulling back. So honestly, we should be getting really, really happy because this structurally for the next few years is really setting up the foundation to continue this most recent move. So this move here, yeah, it's a fast move. But now if we're coming down like this, we want to go up at the angle of the white dotted line. If we stay near the white dotted line, everything's going to be really nice and easy. As long as there's not some crazy external event like COVID, right? It's actually better to just hug near the white dotted line and we can just keep cruising. If we go above the red dotted line, it increases the odds, like back here in 2021 and 2022, it increases the odds that we have to correct down all the way down to the green. And at the end of the day as well, if you're holding for a long period of time, there's nothing really wrong with that as well. Because if you just dollar cost in through all of this, then where's the average price? It turns out to be near the dotted line again, right in the middle, right? But it is a much better feeling to be buying in near the lows. But, rather than the higher half, so between the white and the red, it is much better to be buying in near the lows. But, we just can't wait for those opportunities because most of the time, around 75% of the time, the market is trending higher, right? And most of the time, it is above that white dotted line, right? So let's just draw it here. Look at all of this. All of this. This literally goes practically the whole thing, right? All of this is in the top half, right? And now we're back in the top half. It's very, very normal. We just don't want to go above the red, right? And now that we're quite far away from the red, that's a good thing. Good thing. We don't have to be scared here. Now, if I just draw the bottom half, look, obviously not an exact science, so don't get real upset with me here. But look, COVID was an outlier. Big, massive red drops on COVID. Big, massive. Look, that's the biggest red drops we've ever had, in these weekly candles. All right. Now, before we talk about the COVID, let's go back. And then we had great financial crisis as well. They're the only two major events where we actually went out of the green line. Now, how scary were those events? Extremely scary, right? Extremely scary. But at the same time, with hindsight, what are you thinking now? I know what you're thinking, because I'm thinking the exact same thing. Look at that 2009 financial crisis, 2008 financial crisis. If you bought the dip and held, how much money have you made? Right? This is the S&P 500, very safe investment. Boom, all the way till today. 700 and let's get a bit more accurate than that. Come on. This is let's go down. Where are we? Until today, it's about 689%, right? It's between 650% and 700%. If we go to the top here, boom, 740%, right? Massive, massive, massive gains, right? So that's the beauty of this chart. It helps keep our emotions in check. It helps us zoom out. Look at the trend over the last few decades, right? This most recent little dip, that's exactly what it is. A little blip on the market. It's nothing, right? And then ask yourself honestly and prepare in advance. Imagine the market did dip and we fell out of the green. We fell out just like this. Look how many times that's happened in the last few decades. One. Let's draw it in. One. Two. If we got that, which I don't think we will, please don't sell near the bottom. All right. It's not financial advice, but it's probably the buying opportunity of a lifetime. Just like COVID was. If you bought in COVID, you made a lot of money. If you bought in 2008, you made even more money, right? That's what we need to be thinking about. So when there's blood on the streets, everybody is panicking. We have to be a contrarian, and we actually have to do the opposite, right? So now's not that time. Now's not that time. We're just coming back down to where we're supposed to be, near the white dotted line. Honestly, most of the time we're supposed to be just above the white dotted line, right? That is what is normal. We trend above the white dotted line for as long as possible. Whenever we get near the red, it increases the odds that there's going to be a pullback of some sort. But it doesn't mean there has to be a pullback. The market can keep on trending. So for me right now, what am I saying? I'm saying, hey, the market is a lot healthier today than it was 3 weeks ago. It is. The market is a lot healthier than it was 3 weeks ago. 3 weeks ago at the top here, right? We're just going up a little bit too quick. We're now pulling back, getting closer to the white line. That's where we want to be. And yeah, I had the alarm drawn in, waiting for it. I thought TradingView messed up on me. But what do you know? It hasn't even touched it yet. So will we hit the green? I'm not sure. I think there's a decent chance. But yeah, 3 weeks down, it's pretty quick. But honestly, it's normal. Like these 3 weeks here, that looks exactly the same as this to me. Have we forgotten about this? There is a high chance that we just go boom, like that, right until the end of the year, right? No one actually knows. It's just a game of probabilities. Right now, the probabilities are saying if we buy into these prices and we hold for a couple of years, at least a couple of years, we're probably going to be in a profit, right? So as long as you're a long-term investor, that's all that matters. If your time horizon is between 1 and 5 years, the more you push it out past that 5-year mark, the higher chance of success. Like, it is actually a good exercise. I recommend you to just go and say, if I bought here, well, maybe not here, go back way earlier. Go back to the start of the COVID crash. 2008. If I bought here 5 years later, where was the price? So this is in 2008. That means 2013. Boom. You're in a profit. Yeah, you went all the way down first to get to here, but you're in a profit, right? So then if I bought here in 5 years' time, it's 2013, 2018, right? 2018 is not even on this side of the chart yet. We've got to go up. 2018 is all the way up here roughly, right? Boom. So you just do that. Most of the time, if you hold for at least 5 years, you're going to be making some pretty decent returns, and most likely they are better than holding your money in something like a bank account. But obviously, the price to pay when you do this is the volatility, right? A bank, the way I like to look at it is like a bank, right, is extremely safe. There is no volatility, but then what do you get? You get like barely any reward. With the stock market, to get these gains, you have to suffer, and the suffering comes from the volatility. It can be stressful. But the longer you stay in the market, slowly over time, you can actually train your emotions and switch, right? I remember when I was just got into the market 10 years ago, like every dip and, every dip that came, I'll get scared. Every time it pumped, I got so happy. Now I honestly can do the opposite, right? And once you achieve that, like for me, it's one of the things I'm most proud of. Like right now, I feel literally nothing. I feel nothing. And I actually truly feel a lot happier than I did 3 weeks ago. Like I was getting scared. Like, oh, I'm going to have to make, if this turns into a bubble, right, and this starts breaking out like crazy, then I'm going to have to make some pretty drastic decisions. Because whenever you go crazy high, odds are you go crazy low after it. Now we've pulled back nicely. I'm like, all right, I can practically go on vacation here because now the market has just normalized a bit and I don't have to worry about making a drastic change because, whenever we make a drastic changes to our portfolio, most likely it's pretty hard to stick to a plan. And yeah, it's just like the goal is at the end of the day to do no work, to just hold ups and downs, ups and downs. We just go through it. It's a roller coaster. And yeah, that's what we do. We get paid for holding through the volatility. All right. So that's pretty much everything with the S&P 500. It looks very standard. Let's go to the NASDAQ. All right. Obviously, the NASDAQ, what do we know about the NASDAQ? The NASDAQ moves a little bit quicker than the S&P 500. So the NASDAQ is only 100 companies. The S&P 500 is 500 companies. I recommend what you do is you go type in S&P 500 holdings and just look at the percentages, the allocations in that portfolio. Compare that to the NASDAQ 100, right? You'll see the NASDAQ 100 has a much larger concentration to the larger stocks. I think it's roughly like 50% of the top 5 or so. So that's not really diversified, is it? So you're going to get bigger moves up and down. And generally speaking, the best companies in the world are, the biggest. Yeah, that's why over time the NASDAQ 100 recently, over the last couple of decades, has outperformed the S&P 500. But if you go and check the volatility, it moves up and down more than the S&P 500. So again, that's the price you pay. For bigger returns, there's more volatility. You got to hold through it. It's not easy. All right, not easy. So NASDAQ 100 still definitely more on the pricey side. Wait, has my thing messed up? All right. So no, it hasn't. It's all looking pretty good. Now, I've got my lines in here, the red and the green, similar to the S&P 500, but I'm not so content that these are legitimate lines. Like this does trend from back in 1985. So I do think it means something. But if I'm just using my, I don't know, like my, what's it called? What's the word called? I don't know. Just say I'm just using my wisdom or whatever. The companies back in the 1980s, I don't think they're as good as today's companies. So I would expect this trend to break and for it to go up faster today, right? And then, if I'm just thinking like a child, if we've got the age of AI that's about to start kicking in, obviously it's already started with, big data, machine learning, all that stuff. But if AI is going to start truly kicking in, and this is just the first innings of it, I made that video about, if there isn't robots around, like I don't even have a robot yet. Like I'm not selling until I've got a robot. I personally don't have a robot. I don't know about you. Do you have a robot? If there's no flying cars, there's no robots. If it doesn't look like, if the world, when I look out the window, if the world doesn't look like a sci-fi metropolis, I ain't selling, right? I'm waiting for that day. So I believe, yeah, it's still first innings of AI. I believe that these companies are going to be better than the companies in the 1980s. Therefore, I'm thinking that the growth rate should be faster. And also, just in general as well, like I've mentioned this before with the S&P 500, that the beauty is that over time, I think most people would agree that we get smarter, right? Because of history. Yeah, of course, humans, we repeat the same mistakes often. But when it comes to companies, it's like I'm pretty sure CEOs are studying the companies that came before them and are trying to improve on them. And, I like to say that, the companies back, in the early days of the S&P 500, they're not tech companies with these massive margins. They're more like steel companies, a lot of expenses, capital intensive. They're not like today's tech companies. And now we're entering into a new revolution. This is what I believe. AI has the ability to make these companies a lot more efficient and potentially cut off a lot of their labor cost, right? That's what it's about. That's what it's about. Eventually, the end goal is to just replace every single job so we don't actually have to work. Now, I don't know what that means for the world, but if we can pull it off, I'd rather work not at all than have to work, I think the world would be a better place. Imagine there's robots gathering our food, or raising, animals on a farm or whatever it happens to be, or maybe there's lab grown animals at that stage. Who knows? But just imagine that whatever I'm doing in my life, if I had a robot to do it for me, then what do I actually have to do? I can just enjoy myself now, right? I think that was the big push, right? I think I'm pretty sure people have tested it. What happens when you force people to work 7 days a week? And then what happens when you give them 2 days off? I think productivity goes up a little bit, right? Happiness goes up, that's for sure. So I think, yeah, I personally get joy out of my work, but I can also get joy out of doing nothing as well, just hanging with friends and family, doing a whole heap of experiences. I'd probably prefer that, to be honest. So that, yeah, a little bit of a rant there. But yeah, I believe we're at the starting stages of AI. I think this is the first innings. I wouldn't be surprised. Usually, whenever there is something that's new, there's that initial excitement. Often there is a shakeout, right? Often there is a shakeout. Now, I don't know if a shakeout is coming, or maybe this was the beginning of AI, everybody getting happy, and there already has been a shakeout. I'm not sure. If there is a shakeout now, like this, yeah, this previous correction in 2022, that felt quite long. It corrected quite a bit. It was, decently, I don't know, it's not really scary for me anymore. It's more annoying. That, every day you see your portfolio value go down and go down and go down. It's a tiny bit annoying for me. But I just need to remind myself as well, looking at the chart to financial freedom, the more we correct, the better it actually is, right? So what I'm saying is, yeah, it's slightly annoying that it's going down, but at the same time, I should be getting really happy. It's getting near the green. Got to be buying in big size. But it's only slightly annoying in the sense that I'd just rather it cruise along the white dotted line. That's me personally. A little bit of insight into, my honest emotions. I'm still not 100% perfect yet. Yeah, so I wouldn't be surprised if there's a big shakeout before you get the rip. But, if this AI thing turns out to be as big as we think it can be, I don't think you wanna sell on the shakeout. I think you want to be buying in that dip. Um, so yeah, NASDAQ, it's looking healthy. It's come down to this yellow trend line. This yellow trend line is a bit steep, so I would like it to correct a little bit more. I'm going to delete. Oh no, I'll keep it in for now. Just from another video where I was looking at potential bubble scenarios. But for me, the line to keep an eye on, I think, is the green dotted line. I wouldn't be surprised if that turns into be the new angle that we trend at. Yes, the 1980s trended with this thick green line here, solid line, and this red was the roof. Then we turned into the bubble. The bubble started taking off in 1996 and went all the way to 2000. How much did it go up? Let's measure again. I forgot. It went up in just those few years 620%, right? 620%. And then, yeah, you can see how this yellow line relates to this yellow line. And then I had previously the orange, and the orange trended up even higher. So 600%. Imagine we went up 600% today. Where would that take us? It's taken us all the way to 130,000, right? 130,000. on the NASDAQ 100. So that's also why sometimes, like, I've already ran through bubble scenarios. I've already got a game plan. The game plan isn't, hey, sell everything as soon as you get out of the red line here. Things can change. This, at the end of the day, these are just random lines I've drawn on a chart. I think they have, they're valid, but they can always change. So that's why I got the green line ready. So I wouldn't be surprised if we start trending up like that. What happens if this starts becoming the new trend like that? The red is over here. What happens if the red is like that? Right? I mean, maybe I'll make it. Let me make this so it's a bit easier to see. So imagine it turns into these lines. Let's go dashed. Let's go straight. Imagine it turns into that. I think that's there's a potential possibility that might happen. That's why I've already drawn it in. I don't think that makes sense. Companies back then compared to companies today, we may have a new trend that's already started, but we just don't have the data yet and the dot points yet, so we can draw in the lines. But it looks like we might be onto something. Then what are we missing? We're just missing the white dotted in between. Boom. There we go. What if this is the new trend? Who knows, right? Looks pretty clean to me. Yeah. So NASDAQ 100, it feels like the chart is the chart, but in terms of the feeling, imagine I like to think, outside the box. I love charts because visually they can help me understand what's happening with the market very, very quickly and where we stand in the market. But at the same time, sometimes I like to think, imagine like if I literally had no eyesight, then how would I gauge the market? All right, so now I can only hear what's happening. I can't actually see anything visually. And I've thought about that a lot, like I do definitely take my eyes for granted. I'm a very visual person. So I like to think with the opposite mind. What I'm saying, I literally had no eyes. I couldn't see. I was actually blind. I just have to listen to what's happening right now. We're hearing these AI stories. How new is it? Is it old? Is there, who's investing in this space? All right, biggest tech companies in the world, they're investing extremely heavy. CEOs like Mark Zuckerberg, one of the richest, I think he was the richest guy by age 30 ever, right? He's saying like he wants to win. He'd rather invest harder than not enough, right? That I tend to agree with him. And this AI story has only been a year or two, right? So I think it's still early innings. Again, I want to hear the noises. I want to hear what's happening. Is there a robot that's working for me? All right? Is there a robot that's working? There's not. All right, I'm still holding. Second, the market is actually at an all-time high right now. All right? Obviously, we're looking at this with eyes, yeah? But we can ask someone, is the market at highs? Boom. It is. We go straight across the top here. The market is actually at a high. We should be so happy. The market is at a brand new high. This, I made a video about this dip, Whenever you make a high, you pull back hard, you break out, that's a good time to buy, right? Everyone in the history of that asset is now in a profit. Most likely, the majority of them are happy. When someone is happy, what are they likely to do? They're likely to do more of what they've already done, right? So they're being rewarded by buying. Like they're being rewarded for buying, so they're probably going to be buying more, right? Then, if we get the pullback and we test that the market is real, it is legit at that support level, that's your second chance to get in. Now, not often do we get that second chance, so this was actually quite fortunate. I would be highly, highly, highly surprised if the market comes down to there and gives us a third opportunity. If it does give us a third opportunity, that is the biggest blessing ever, right? Can it happen? It can, but I feel like that's odd for the stock market. Why? The stock market is not a friendly place, right? It's not going to give you gifts every single day. The gifts are very, very rare. The gifts are like, oh, all right, this is a gift, all right? This is a medium gift. The real big gifts, COVID, 2009 financial crisis, they happen once a decade. They don't happen frequently. Even these medium gifts, you know, I would say they generally only happen like once a year, the medium sized ones. So to get two of them in the same year to buy in at the breakout price, I think the odds are pretty low. I'd say 25% odds that we come down here. If we do, I don't think we'd stay long. Obviously, can be wrong. If we hug and we come down to this green all the way down here at the bottom, but wow, unbelievable, unbelievable. And that's how we should be thinking about it. It's an unbelievable gift. It's a blessing. All right, so that's what I'm saying. That's what I'm currently thinking. Um, if we correct any more, I think odds are we bounce on the yellow. But yeah, let's wait and see. Let's wait and see. At the end of the day, I'm in the position and I've gotten myself to a level of experience where if it just keeps on going, I actually understand that this is a blessing and I don't get afraid. Just keep buying. Just keep buying. And what I do, if the market comes down harder, I sacrifice more. I try to cut back on my spending so I can get more dollar cost averaging into the market. Because what do we know? If you never try to time the market and you just buy every month or so or every 2 weeks, it's a winning strategy. It's always one. Even if you bought at the top here today, you're in a profit, right? I mean, before the top in 2021, December 2021, you're in a profit today. So that we know the dollar cost averaging strategy works. Now, if we do get these zigzags, I like to just sacrifice a little bit more, knowing that it's temporary. Hey, we're going to be sacrificing for the next 6 months to 12 months. We're going to be eating out a little bit less. We're going to be spending a little bit less. And we're going to get a little bit more money into the market. So we're going to weight our average investment down to these cheaper prices. So then when it goes back up again, we make even more money. Now, does this really make that much of a difference? Not really. Is it even really worth it for most people? Probably not. But for me, I like to maximize this game of money. I just need to be honest. I like to maximize it. Um, so that's how I think, right? Now, this game of money and this game of investing, it's a competitive place. It's just like, Olympics are on right now. There's people that like to play tennis on the weekends. And there's people that like to dominate and the people that like to truly, truly, truly win and the ones that try to be the best in the world. I'm more that crazy guy. I try to maximize it, but at the same time, I think you should just take all of that with a grain of salt. I think there's a lot of people out there that have a similar mindset, but hey, sometimes it's probably not even worth it. I might look back, in 10 years from now, I might look back and say, hey, it wasn't even really worth it. I should just enjoy myself because really the financial returns don't really, the reward isn't really worth it, the sacrifice. So, yeah. At the end of the day, you just keep dollar cost averaging, same amount. It's great. If you want to, if you want to maximize your results, you may want to consider dollar cost averaging a little bit harder when the market dips. All right. So that's pretty much everything for the NASDAQ. What should we do? Check out some other things real quick. Bitcoin, back down to a support level. Looks like a buying opportunity, I think. I wouldn't be surprised you get a big bounce in here. And then, mark my words, if we reach a new all-time high and get a solid breakout by like 3% and close the week above it, you're probably going to rock it. You're probably going to rock it. That's what I'll be saying. But you're coming back down to support. Let's see if you get a rocket. Whenever you get this, all right, we're going to the moon. Let's check out Ethereum. This one's not as nice. This one, I think, is somewhat scary. Do I think it's over for Ethereum? Based on the chart, it is not looking nice. But again, if we do eventually, if the hype comes back with Ethereum, because right now it is quiet. If we're using the ears, it is quiet. I can't hear much happening with Ethereum. If we do get back to all-time highs, it's probably going to rocket as well. That's my general rule with anything. Let's check out Louis. Louis is correcting hard. So this trend is no longer valid. I'd say it's broken. And now we need to start waiting for this to finish the correction. Wherever it goes, that's probably the new line. That's what I'll be thinking. Um, but like it's not the end of the world when these trend lines break. In the most recent dip with individual stocks, um, you know, um, a lot of them did break down, and then you eventually just draw more new lines. Like these lines are just to guide us. All right, they're not everything. What else we got? L'Oreal right at the green. I think we need to line this one up a little bit better. It seems like it's out a little bit. All right, I'm saying it's like a little bit of buying coming in now. Let's see what happens. Does it break down and make a new trend? Often you don't even have to draw new trends. They can break down and recover, and the trend continues. That happens frequently. Like the S&P, like a good example is the S&P 500. COVID broke down, recovered, and continued the trend. Boom, bounced on the previous line. Sometimes it does work like magic. What else we got to look at? What's interesting? Uber pulling back to the support. I think it's potentially a gift. Microsoft's well and truly gone from that previous high. So the big support is here at like 344ish, 350. Actually, yeah, go 350. Right. I've got my alarm here ready to go on the diagonal because if it does ever come back down to that trend line, whew, do I want to be a buyer? I do have, that horizontal as well. If we do get that opportunity to become a buyer at this level as well, I'm liking that. I'll probably increase my weighting when that happened. Google, very similar. We had the big correction down to the trend line. Let's zoom out so we can see what we're looking at. Boom. Come on. Healthy company here. Healthy company. For me, odds are I think it will reverse roughly around the support level and go higher. I'll say it's high odds, 50% odds. I think it can come down here. If it does, you know what it is, buying opportunity. All right, 10-cent Chinese stocks. China's holding up all right, actually. Interesting that China is not correcting. Well, this particular Chinese stock, 10-cent, is not correcting as hard as the US. That's quite interesting. Nvidia, the golden child of the market, it's correcting a little bit. In terms of percentage, it's corrected a lot, right? Like, what is this? Like, from the top here, that was 140. That was 140 at the top there. Now to here, that's 27% correction. All right, 27% correction. How many times has it done that? That recent correction where it went down all the way from the red to the green, boom, 70%. It is in the realm of possibilities that we come down again to the green. Now, that would be extremely scary because from the top, that would be a correction of roughly, again, 74%, 75%. If it went at the same angle, right? If it went at this angle and corrected in a similar fashion, boom, it would get us roughly here. So yeah, let's measure up there. Roughly, 73% correction. It's very possible. Now, again, this was not, it didn't feel nice going through this 70% correction. Do I wish I bought a whole lot more than I did? I definitely do. Now, I'm going to make a promise to myself that if we do get this correction here, I'm going to try my best to remember this is the early stage of AI. I believe NVIDIA will continue to be a market leader for the future. Dylan, buy more. Buy more. You better buy, mate. If this happens, you better buy. Easier said than done. Waste management, holding strong. Come on, look at this stock. All she does is pump by 17% every year. That's all she does. Costco, same story. All she does is pump by 19% every year. Like, come on, look at the zigs and the zags on these fellas. That's what they like to do. They're stocks. They're supposed to zig. They're supposed to zag. Palantir, all right, a newer stock. Same thing, These are the same patterns like, Bitcoin. You're holding. You got a level. You got a key level. I'm not sure if it's this level or it's the top here, right? I'm just going to go with the lower one because I think this was when there was an IPO. There's not much volume. The market is quite crazy. And these are just candle wicks, right? They're not really the candle bodies, so the market didn't spend much time in those areas. Now, I don't know if we correct all the way back down here, right? Or if, we consolidate a little bit and then we break out. Whenever we break out and we hold here for a few weeks, and it's by more than 3%, I'm pretty sure the rocket starts taking off. AVGO looks all right to me. I'm not sure what happened to my lines. I don't know why they went all the way over here. But look, come on. Look at these fellas. They just keep trending. MMC, same thing. This is one of those stocks that just likes to keep going. One of those 17 percenters, you know. I put in the bucket of like that waste management, the Costco. They look the same. Like they're actually less volatile. They're like, well, they're not that volatile. Here's a good example of COVID comes out of the trend but resumes the trend and it keeps on bouncing. Right? So just because you break some trends, like for me, the stock that's kind of feeling like that to me is kind of like Louis. All right. Could be wrong, but I don't know. This feels like an opportunity to me. It's Louis Vuitton. Go Google how many companies they own and where they're invested. These people are smart. These people are really smart. So I would imagine that this resumes a trend. If not, and it creates a new trend line, right, and just goes up a little bit slower like this, hey, it's not the end of the world. I'm not all in on this stock. It's one of my favorites, but I'm not all in. So I don't need any stock to make me rich. I've already diversified across, many, many, many stocks. So no stock can make me poor. No stock can make me rich. All right, we've done these. Did we do Amazon? Amazon. All right. I was actually wrong on this one. I thought this breakout here was the move. That was the move that really took us out. So it turns out that was a fakie. Strong breakout to all-time highs. All right, fakie. Whenever you get these fakies, and then you go back above. So now let's just say we're at support. Let's say we consolidate. We break out back above. We do have the what's it called? The lines in here like that. Look at that. Boom. Let's make this dotted as well. So then it all lines up. Come on. We're under the white dotted line. We're in the realm of cheap, the area of cheap. If we get above the fakie, we're probably going to move. We're probably going to move. Again, closing my eyes and just thinking, using my brain, using my ears. Is Amazon bigger or smaller 5 to 10 years from now? Pretty sure they're going to be bigger. I can't see a world where they're smaller. I can see a world where they're smaller, but the odds of it, 5%? What's your number? That's how when you be thinking in probabilities. No one knows the future, right? No one knows the future. Let's go take a look at Tesla's an interesting one. Always Tesla. All right. For me, Tesla, it just got a little bit again, hindsight is 2020. I want to be looking at this line down here, the green at the lowest level. And let's just make that I don't know, let's make it purple. I reckon that's the key level. These ones don't matter that much anymore. These two are my alarms, and the red's the top. All right. I'm going to get rid of this as well. So the trend with Tesla is when you're near the purple, great buy, cheap. When you get really far away with it, you have to consolidate and get back to it. Once you do and you break out from a new high, you pump, right? And now what are we in? We're in the zone of like, this thing can go sideways until 2030-ish. If this trend continues, it can go sideways until 2030-ish. Now, what are my thoughts on Tesla? I believe they're probably going to be the market leaders in building, the robots. What's it called? Optimus, I think. I think they're probably going to be the market leaders. I think there's also a little bit of branding in there, like like Apple. Like at the end of the day, all the phones are the same in the world, right? They're all pretty much the same thing. But the one with the Apple logo on it, it just sells a little more, doesn't it? I think it's probably going to be the same with the robots. They're probably going to be all the same. But Tesla's a little bit cooler, isn't it? It's kind of like Apple. There's a bit of there's that luxury branding element to it. That's kind of like what I think. I think everyone's going to be building some great robots. I think Tesla's probably going to be a tiny little bit better than everyone else. Um, and hopefully they get to the market way quicker than everyone else, so they can, get a lot of make a lot of profit during that year or two when the rest of the world's trying to catch up. What reminds me of that? That reminds me of the iPhone. The iPhone, it really did take Samsung 4 or 5 years to catch up. There was definitely a big gap. I think now, for me, honestly, without any bias, I believe Samsung and Apple's the same thing. All right, it's the same thing now. But there was that 5 year gap where Apple had the lead on the market. That might happen with Tesla. Who knows? Again, it's not like my whole net worth's in Tesla, so I'm willing to wait. How crazy is that? I'm honestly willing to wait until 2030. 2030, it's not going to bother me. Even if this thing goes to zero, it's not really going to bother me because it's not going to result in financial ruin. All right, let's go. I'm interested to see BYD here. So it's like the Chinese equivalent of Tesla in a way. Electric vehicles of China. Interesting. China's holding up. So we've got to be taking note of these little things. China holding up, right? Before, America pumping, China dumping, China dumping. We might be seeing the start of a new trend here. I want to take a look at Alibaba. All right, Alibaba's not as good. It's just holding there. I'm still trying to think what is actually going on with Baba. Like when I look at the company, they generate a lot of cash. They've got a lot of cash on the balance sheet. It looks like they can, turn it around, but stock price doesn't agree just yet. What's Netflix doing? All right, so Netflix hasn't broken out to that high yet. So I think, same thing. We just got to wait for that high, consolidate a little bit more, do a little bit of this action. And, our results. The stock market this year, even after this correction, it has been very kind to us. So let's not take it for granted, right? When the market moves like it has moved, that's good. All right, what else is calling out to be looked? Ferrari. Don't mind a little bit of Ferrari. Let's have a look. All right. So this is the Milan one, Italy. This is the New York one. So, not much difference in them. But again, Ferrari's holding strong. That's interesting. I wonder what is the go there. SPGI is one of those Costco ones where she just likes to always compound. Very nice little compounder. So I'm gonna put my alarm. It has already broken out to the highs. Yeah, it's holding strong. Relative strength in SPGI. Interesting to take note of that. Let's look at Blackstone. Blackstone similar, a little bit below. Yes, this is looking nice. This is a strong breakout. I like if I was still short term trading or swing trading, I'll be placing a trade here with this one. I'll be placing a trade buy here. Put my stop loss below this swing low. That's 37% ish. Look at that. Like it feels like a good trade. Like overall, the market's been going up over the last since 2008, trending really, really nicely. The market is struggling at the moment, correcting, but this is a stock that's holding strong with green candles. It's showing that it's going against the trend. Whenever a stock does that, usually that's a pretty damn good sign. So I'll be drawing my line in across the top. So yeah, it probably needs one more week to close above that. And then I think it's practically good to go. This it's looking good. Again, will this trade work? I think it's a 70% chance. Like that's the number in my head. 70% chance that we don't get stopped out here on this one. What else we got? ODFL. Again, just trending. It's fine. And what else? Yeah, I think that's about it. I think that's all the ones that are coming to mind. Um, Actually, where's the REA? Let's do an Aussie stock. We haven't got any Aussie stocks in there. Again, REA correcting. What's it down from the highs? So it's realestate.com. Yeah, only 8%. All right. If it comes back down to the green, it's probably a buying opportunity. If we scroll out, remember, when in doubt, zoom out. Look at this fella go. So overall, you know, overall, I don't think there's anything to be concerned about. We just need to zoom out, look at the big picture. I love this chart. Like, I honestly believe this is genius. Road to financial freedom. Someone's got to pay me for this. Like, it's just too good. It's just too good for now. Like, I want to see how long this thing lasts for. I believe that this is a work of art. If you want to make an NFT, make an NFT about this fella. She's a beauty. All right, so yeah, we're coming back down to the white dotted line. Good time to buy in my eyes. I'm loving it. I'm a lot happier now than I was 3 weeks ago. All right, guys, that's everything. If you've got any questions, you know what to do. I'll see you in the next one.